I'm worried about wealth terrorism. We hear about like climate terrorism, the climate terrorists. I'm worried that actually people will start shooting down private jets style, and like the inequality of wealth will be violent. Do you share that concern?
So I think wealth inequality is a big problem. I think there are ways to address it. And I think the key is, the analogy I would make is one of the things the U.S. has done very, very well is promote home ownership. In fact, they did it a little too well going into the crisis, but in general, it's been a good thing. And our system of 30-year fixed rate mortgages has enabled home ownership for a lot of people. And that's also created a lot of wealth. And the sort of the middle classes and homeowners, up through the financial crisis, while their wages weren't keeping pace, is with upper income strata, they were making a lot of money in their homes. And then the financial crisis and over leveraging wiped out people's sort of home equity. And I sort of view that as kind of the fulcrum moment when the wealth inequality issues really started to build. And I think the key is people need to own a piece. And by the way, that started to rebuild in the last, since the financial crisis. A lot of people bought homes, recapitalized, and they built wealth in their homes. But the piece that a lot of people are missing out on is they're missing out on participating in the growth. That's the Tom Piketty thing, which is that, wages have not compounded at the same rate as assets. Asset compounding has vastly. So if you're someone who has assets that you have beyond what you need for your daily needs, and you can invest capital, you can build wealth. We need to give that to every American. And, compounding is this very powerful thing. So the New York Times did a piece on like favorite ideas to help solve problems. My idea was you give every baby that's born in America, whatever, like a $7,000 account. I just sort of making up a number, $6,500 when they're born. And they can't remove money from that account, and it's tax exempt. And it compounds, and it gets invested in like an index fund. If it earns, historic rates of returns in markets, by the time you're 65, it's $1 million. But it gives someone a minimum stake in the success of the country, of capitalism. It makes them an owner, right? By the way, that would cost $20 billion a year to do that. I think the math that seems like a tiny little number. Today. Just take the number of babies times whatever, $7,000 or $8,000. It's like a nothing thing. But I think it would start to give everyone in this country a piece of the success of the country. So I think we need these sort of savings accounts, and we can't wait until people start creating an IRA or 401k by the time they're, 25 or 30 or 35. You want to start when they're a baby, just because the laws of compounding. That extra 25 years is very, very material. So I think that's a key device to help address the problem. And I think we need smart tax policy. And there are lots of things we can do.
What is smart tax policy, Bill?
So there are a lot of things that make no sense to me. So for example, if you own real estate or certain other kinds of assets, you can do what are called like-kind exchanges, where you can sell an asset, i.e., and you pay taxes, or you can exchange it for another asset, right? And you don't pay any taxes. It's a total joke. It's like a gimmick. It's a complete giveaway to people in real estate. There's so many, if you're a dedicated real estate investor, you can pass through, like President Trump, you can pass through the depreciation on those real estate assets and offset your other income, which is why Donald Trump didn't pay taxes pretty much his entire life. For things like that are easily fixable. Here's another one. So if you're Elon Musk, right, I'm not a believer in wealth taxes, but if you're borrowing $5 billion against your Tesla stock, and you've borrowed more than your basis of the Tesla stock, I think the distribution from that kind of borrowing should be taxable, because it's really tantamount to a sale. You're getting back more than the money that you invested. That should be, when you refinance a piece of real estate, commercial real estate, if you buy an apartment complex for $100 million and it goes in value to $200 million, and you refinance the mortgage and you take out $50 million of proceeds, I think those proceeds in excess, should be treated as a taxable
But Bill,
situation.
this is highly logical and very much in vogue of kind of leftist regimes which are in power. Why do they not do it?
These are, by the way, I think the Elon Musks of the world, I think would support this kind of tax. It makes sense. The problem with the wealth tax, if you got the Biden wealth tax, which is like 25% of the appreciation of things that you own privately. It's going to bankrupt every startup. No one will ever start a business in America anymore, right? Because no one will be able to. What do? You sell as the, God forbid someone puts money in your company at $1 billion valuation. All of a sudden you owe, if you own half the company, you owe $100 million in taxes that year. Those kinds of taxes, I think, are, destructive. You don't want to have a tax policy that destroys the economy, right? You want to have a tax policy that makes sense. But there's certain things that are just wrong and unfair, and they just persist. Like, by the way, carried interest, which I've said my piece on for a long time, giving someone a disproportionate share of gain is a very powerful thing to drive economic behavior. But I think differently about the real estate entrepreneur, the oil and gas entrepreneur, building a business than us folks in the asset management industry. I don't think we need that extra tax advantage, i.e. carried interest, when you're managing assets to motivate our economic behavior.